All right, Cesar with Channel Mortgage Partners. At this time, I'm talking about housing supply. It's extremely different and extremely limited. So this time it's different. A lot of people have a lot of concerns whether there's going to be some type of market correction, and we don't see it right now. The reason we don't see it is because home values appreciated by about 10% in 2020, and they're forecast to appreciate it by about another 5% this year, 2021. This has some voicing concern that may be another housing bubble like the one we experienced 10 years ago. Here are the 3 reasons why this market is totally different. So in real estate, supply and demand is measured in months of supply of inventory, which is based off the number of current homes for sale compared to the number of buyers in the market. Normal months supply for inventory for the market is about 6 months. Anything above that defines a buyer's market, indicating that prices will soften. Anything below that defines a seller's market, in which prices normally appreciate, and that's when sellers are trying to get the max amount of money for their properties. Between 2006 and 2008, the month supply of inventory increased from just over 5 months to 11 months in inventory, and has been under 5 months for the last 3 years, and currently stands at 1.9 months, a historic low. Remember, if supply is low and demand is high, prices naturally increase, like I just mentioned. Now, this time, the housing market, the housing demand is real. During the housing boom in the mid-2000s, people got caught up in the frenzy, bought houses based on an unrealistic belief that the housing values will continue to escalate. In the current real estate market, demand is real, not fabricated. The desire to own, coupled with historically low mortgage rate, makes today purchasing a home strong, sound financial decision. Remember, if supply is low and demand is high, prices naturally increase. This time, households have plenty of equity. During the housing boom, the homeowners started using their homes like ATM machines. As prices began to drop, homeowners found themselves in a negative equity situation where the mortgage was higher than the value of their home. Many defaulted on their payments, which led to an avalanche of foreclosures. To also keep in mind, the exotic was back then. You had the negative option arm, which actually it was more for investors, but more homeowners that were trying to get a standard mortgage actually took advantage of it, or they were placed in the wrong loans. Today, the banks and the American people have shown that they've learned a valuable lesson from the housing crisis a little over a decade ago. Cash out refinances volume over the last 3 years was less than a third of what it was compared to the 3 years leading to the crash. So as you can see, folks, times have changed. This is not the time of the recession, the real estate recession or financial crash. Obviously, we've been impacted by all this the COVID pandemic, but we know that we're in a better situation than we were back then. Homeowners are equity richer in situations where they can take advantage of the low interest rates, where they can take advantage of other opportunities and possibly increase their net worth. So if you guys have any questions, feel free to reach out to me, share, like, and comment. Let me know what you guys think. And as always, I'm here to help and guide. Thank you so much.